4 pillars for a successful business in Canada. This is part 2, and these are pillars 3 and 4. If you haven't seen part 1, you're going to see it here in the list of our videos in our channel. You can find it. Click the subscribe button, set up the alert. If the content of this video is useful to you, let us know by clicking the like button, okay? So the 2 pillars we're going to talk about today have more to do with the infrastructure of the business. The first one has to do with finance and risk management. So here I cannot emphasize this enough. You know, you may be coming from a different country, or you may have built several successful businesses and you understand numbers, you understand success. But it's very important to use Canadian financial benchmarks. And how do we do that? You have excellent free public sources of information in Canada where you can get information about businesses that are similar to yours. They're similar in size, similar type of operation, and in the same geography that you are willing to operate in Canada. And what's the benefit of getting that? The first thing is that you're going to get a cost structure in Canada based on the real experience of a large number of companies that are similar to the business you're building in Canada. It's important to understand why, because the cost structure sometimes is different. There are things where Canadians have to spend more money or are more willing to spend more money than in other countries. So just looking at how the financial statements used to be back home and copy and paste and just to translate to the Canadian currency typically doesn't work, because there are things that you're not going to need to spend as much money as you did back home. But there are other things where you need to spend more money here and then you didn't even think about it back home. So for example, when we look at the profitability of a business, one thing I noticed in many emerging countries is that people need to operate with a very large gross margin or a large markup, depending how you prefer to name it. Why is that? It's because you tend to have a lot of potential contingencies or liabilities. For example, bad debt, clients that don't pay. So you need to build into your gross margins or in your pricing some cushion to allow for those expenses that you don't know, or maybe it's tax liability, maybe it's a government that changes regulation all the time and you need to kind of stash some money aside just in case you have to pay. Maybe it's labor litigation. I don't know what's the specific of your country, but I know that in many countries, the businesses have to set some money aside because there may be a lot of unpredictable things that may happen that will require some cash. And that will make sure that the gross profits have to be large enough to allow for that saving, for that contingency. In Canada, you're going to see the gross margins tend to be lower. But why? Because the operating costs also sometimes tend to be lower because you typically don't need to set this money aside for all this unpredictable, unstable, volatile cost structure. In Canada, things tend to be very predictable in terms of costing, or compared to emerging countries, for example. The bottom line sometimes is similar, right? But the way the cost structure is built and the profits are allocated within different cost categories tend to be very different. Of course, rely on your experience from back home. You know what you're doing for a long time. But please spend some time learning about the Canadian benchmarks, because you may be surprised about things you need to be considering in Canada that you just didn't consider before. Second thing I have to say about finance and risk management is that the market payment terms may be different in Canada. So for example, do people pay in 30 days, 60 days, 90, 180, whatever? Like do you collect payment ahead? Do you collect progress payment? So all these payment terms, they vary a lot by industry and they vary a lot by the different business culture in the place. So you will have to understand, and that again, you get that by talking to people in Canada. So what are the typical payment terms? This is not easy information to obtain just by doing some Google searches. You have to talk to people to understand that flow of working capital and even your need for working capital. Talking about working capital, that how do you finance that, right? Typically in Canada, banks will finance accounts receivable, inventory, work in progress, all that kind of stuff. But you need to have some track record already. You need to have some record of profitability, like some stability in your business so a bank extends credit to you, right? And it's important to understand all that. And even, for example, for long-term financing. So if you need to buy some assets or to make some investments, expand your operation in Canada? Like how do you get that financing? So it's really important to understand that from a Canadian standpoint and how things work here, because things tend to be very different in Canada, because the banking system in Canada is very well developed and very old and very stable. Like, it's one that never crashed during crisis, including the crisis of 2008. No Canadian bank needed bailout back in the day. And then going from payment terms and financing, we need to talk about risks as well. Because here's, for example, there's credit risk. Like, if you're extending payment terms to your clients, what happens if your clients don't pay? How can you protect yourself? Like in Canada, there's a very developed insurance industry that you have even like accounts receivable insurance that's affordable, and a lot of people tend to use that if they're dealing with a client base that they don't know too well. And there may be some labor risks, right, that you may not even be aware of if you just start to hire people and do what you think is right without getting the right advice ahead of time. You may be exposing yourself to workplace safety liabilities or to unpaid taxes and all this kind of stuff, which is really important to understand what kind of labor risks you're subject to, right? And of course, there's also the risk of commercial litigation, like what happens here, or cyber security risk, or somebody may not pay you and suing your company. So there's all these risks. The good news is that there are tools for mitigation of every specific type of risk through a very well-developed insurance industry in Canada. So Canadian companies typically have a more significant insurance cost than in many countries, especially in emerging countries. Okay, if this all sounds a little bit too complicated, oh my gosh, too much work, whatever, we can help you. We can hold your hand in the process. We have our program here, which is a peer group of other business people that are in the same path, and we can help you with that through our program, Your Business in Canada. Okay, but let's look at the final pillar of the 4 pillars that we're talking about. And that has to do with the implementation and the operation. And here I need to stop for a second and tell you one very important thing. You need to have a do-it-yourself mentality, a do-it-yourself mindset. What do I mean by that? Is especially for those of you who are coming from emerging countries, who grew up in a society that has a lot of disparity, you may have gotten used to a lot of delegation and just let other people get to the details and give you summaries. In Canada, you need to roll up your sleeves and understand a little bit of the details yourself. The good news is that rules tend to be relatively simple, but you need to have a level of understanding yourself about, for example, which are the local legal requirements, right? You need to have some basic understanding of how Canadian law under the British common law works, right? You need to understand about contract negotiation in local terms with Canadians. I've seen deals derail at the time where people were about to sign the contract, just because the templates of the contract that were circulating and the wording everywhere, the other side was kind of getting offended. It's like, what do you mean you need my social insurance number? What do you mean you need a witness to sign this contract, right? So all this is very important. There's a cultural aspect in terms of negotiation of contracts that you need to be very aware of. And then we have, of course, accounting and bookkeeping at local standards that may be very different. There's practices probably that you need to do in Canada you didn't have to do back home, and vice versa. Things you had to do back home that you won't need in Canada. So it's vital for you as a business owner or the executive to have this do-it-yourself mentality, to at least understand what it is that has to be done. Don't fully just delegate that and say, oh yeah, my accountant knows that. You need to know and have an understanding. And if you didn't understand the first time they explained, ask again or try to find somebody else who gives you a better explanation, okay? And finally, very vital, you need to understand what you need, how you deal with the tax authority, which are the rates that your business is subject to, the tax rates, different type of taxes and how much you pay, which are the routines that you need and what are the procedures, how does it work, who you have to call, what numbers are requested, which are the deadlines, and which is the process to submit things. So you need really to understand all that, okay? So there's 2 more videos here with more details for you in this journey, okay?